likewise, there are companies, their book value is 5, like you said, the book value of gold is $1,600. Market value is $4,200. It can go to $1,600. It's still viable for the companies or the mining companies to sell it at 1,600 because that's their selling price.
Yeah, so there's a margin of safety, I'm saying.
There's a margin of safety. So similarly, there are companies which are selling 40, 50 times above their book values or 100 times their PE ratios. So what is your take on that? In your company, one is trying to become a unicorn company. 1 year you didn't sell it, it is 3x, but next year it is 10x. What will you do?
Okay, so if a company has become 10x, obviously from the portfolio risk perspective, one should cut it down to a level where we all are comfortable, because if something goes very fast, then it also comes down very fast. So it all depends case to case how it is. So let's say a unicorn company, we don't invest into those kind of companies, first of all. So,
You never know. One company I asked you, it has become 3x or 4x in some cases. You said it has the potential to go 10x. I don't think.
Which is that company?
Which was some gold mining company or something was
Yeah,
there.
so it is still
So you said it has the potential of going, which
Yes.
transferred from Canada to USA.
Yeah. In fact,
Aura or something.
yeah,
Augo.
it's Aura Mineral. So
Yeah.
I think you won the name. So if you saw, I have actually taken the interview of the CEO and I've shared with you.
No, I don't think
Okay,
so.
I'll share with you again. So that's what I was talking about. So I think I understood that you're talking about this company. So I met the CEO. The CEO is a 39-year-old, $50 million net worth person, and a tremendous track record, incredible track record, and the company is so tightly held. We're lucky to have it. Buffett cannot buy this company, by the way. Even if Buffett wants to buy, the company is very small for him because the float is very less. So at $3 billion today or $3.5 billion company, they only $1.5 billion worth is.
We are not discussing that company, but I wanted to ask you general. When it goes to 10x, you replied that at that time you will consider getting out of it or booking the profit.
Yeah.
Or maybe you can
Partially.
keep a third option,
Yeah.
asking the clients if they want to keep it separately with them.
So I won't be asking the client, because then everybody will have a different opinion. That's my responsibility. So what to do with and that is the most important thing. To have a peaceful life, you go deeper, so deep that even if a client wants to come and ask a question and he has all the right, you should have the right answer, because you have worked hard for it. The two companies I read a lot, one who have done very well, and the companies who have not done well. Those two segments, we put more effort to know what is happening. Because if the company has gone down because of temporary reason, we're going to buy more. If a company has gone up for the wrong reason, we will come out. But if the company has gone up for the right reason, we should also be more aware. And I want to tell you something very important. Apple, Google, Microsoft, Netflix, they're all 3,000, 2,000x. So when I came to stock market, one more reason is, like you talked about spirituality. We're doing this podcast because we have enough time. Because I don't have to bet on the every ball. I have to look for right pitch, and then only have to stock. So this year, if you see, I have only added 2 or 3 companies. Now the reason I added is that I want to have them for the next 10 or 5 years, so that I will be still making for all of us 15-20%. Now the idea here is, when I come to stock market, and I was reading these role models of mine, they say don't come to the stock market for percentage gain. Because 3,000 percentage looks very big, but 30x looks very small. So when we come to stock market, we should be coming for X. And that is what the whole thing have changed. So I have done 8x. I am now sitting on 4 and 5x in some companies. But the dream before we leave this world should be that at least 2 or 300x. So that's the whole idea.
Okay. Now, what is the single biggest disruption you foresee in the financial advisory space, and how does your client first model position you to navigate or leverage that change?
The single biggest disruption, I think I will say, is the artificial intelligence and the Gen AI. So all the analysts who would like to sit down in the office and read the balance sheet and financials, that job is taken away. The very important thing now, which is I think all the analysts, the CFA, so-called CAs should understand that the opportunity lies in the imagination, which is the, I always say, artificial imagination. So artificial is, intelligence is still artificial, but manifestation and the courage, because AI will not give you courage, it will give you support, decision I have to take. So now the disruption is one part. The other part is because of the AI now, everybody has become Pandit. And today you will see that market falls swiftly and they go up swiftly. Earlier, if market falls, it will take time to fall. If it goes up, it will take time to go up. But now these things happen quickly because of the machine learning. So I will say that one is a disruption for setting jobs to go. The second is the advantage that value investing will prevail for a longer period of time, because people who understand how to use AI will throw people who do not understand the AI. So it's a disruption for people who do not want to understand how to use this beautiful tool called Gen AI and Agentic AI.
Very nice. Now tell me, bro, what's your criteria to select a company for long term? On fundamentals, you'll select a company, or future prospects like Tesla, or will you be able to catch a unicorn to no matter it will be in depth in the now or initial stage?
So, Ms. Shivlani, we have a very clear understanding that this is not a private equity investment, because we want to give you liquidity. Now, unicorn like Baiju, we all know what happened. And to read a private equity company which can become a unicorn, you need more team members and more aspects to be covered. You need sector-specific expert. So we are right now following value investing 2.0. The 1.0 is that when you buy something of worth 100 at 70 and sell at 100, like a property you buy a property which could be worth $100 and it is at 70, make 30%. Now the second part is you buy a company which is fairly valued, but it's a wonderful company. And then that company can become 5x, 10x in the next 5 to 10 years journey. So we are actually doing the second part, the company which we are buying. So I think your question was more or towards?
It was your choice of choosing them out of the three models. Fundamentals, future prospects like, or will you be able to catch a unicorn?
Okay, so the unicorn is a no. Fundamental plus future prospects, both are important. So I always have saying that kal, aaj and aane wala kal. Now, history talks a lot about the person and the company. There is a saying that whatever strategy you have, culture eats the strategy at breakfast. A lot of companies, with due respect, have the 6 days of working, where their children themselves don't want to work for 6 days, because Google, Apple, Microsoft are all giving hybrid work culture. They're giving 5 days a week. So Gen Z does not want to work 6 days a week. They want flexibility, and they're not 9 to 6 people. And they are more of a, let's say, quality-driven people. They would like to contribute. They want to be part of the business, etc. So fundamental is absolutely important. Fundamental is very, very important. And the future will help me not to sell that at 30 or 40% return. So both are going to go together. So if a company has a great culture and the hunger, it will make money. So this is what 2 things I will take it from the option you gave me.
What is the one resource, book, tool or person that has been most invaluable in your work and life?
So one name, Buffett. The other man is Siddharth Razdan. Probably you would have met him. So you always need a sounding board, because it is very important to understand that when you are part of the show, you become the show. Now, unless you jump out of the show and see it from the lens of a director, you're unable to understand that you are not the only one in this world who's doing it. Everybody else has been doing it. Now, all of us want growth. And you as a customer and all the stakeholders and the employee, they have the expectation from the leaders. So Siddharth has been one person who has been very instrumental. Coming to the book, the recent book I'm reading by Dan Sullivan, that 10x is easier than 2x. That's the book which is very, very useful for me. And I think the most important, the Sacred Bhagavad Gita, that book has changed life forever. And for that, I'm very fortunate to have a guru like Ma Purnanda Saraswati, who happened to be in my life for roughly 9 years. And that 9 years has changed everything for good.
Now tell me, Bhuvanji, where do you see yourself in 20 years?
I see in your heart in the 20 years or today. I do not want to have this 20, 10 years kind of a goal. I want to become a better person. I think with each day passing in life, as actually time is passing us, we're not passing the time. I'm very clear about it. As a soul, we're always there, we'll always be there. So, coming to, if you ask me in the commercial terms, I would like to have more money created with lower risk for all of us. And 20 years is too far. I'm only looking at 3 plus 1 ways. Roughly 5 years down the line, I would like to take this company public.
You see why I asked you 20 years? Because this has been going around in the communication with friends and people and books that 20 years you can make your money 100 times at the rate of doubling 3 or 4 years. So if you have $1 million today, you'll have $100 million in 20 years time. What would you do with them?
Absolutely. So it is more important. So we are. I think we've already announced in the last meeting. So we are creating our foundation. We're already doing the Sri Ganesha Foundation by Dushyant Sridhar coming to address everybody. And Ram Pattabhishekam is happening in the Glendale School on 5th, 6th, 7th, 8th March. So I think that we would like to help the underprivileged, meritorious students. Again, we are not doing something new. We are copying from the best. And we would like to learn how to do a proper charity for the right cause. And we all are in it. I'm sure you do it. We all do it. So I think that in the 20 years, if you want to ask me, I would like this money, like how Rakesh Jhunjhunwala and Buffett have done it, to help a lot of children out there to achieve their dreams.
Very nice. So now, what is the most crucial takeaway you hope every listener gets from your content?
So the most important thing is, I think nowadays we hear that this company has gone bankrupt, investor lost money, and one of the actor has messaged that even he was part of this thing. And I think every 3-4 months we hear it out. I want all the viewers to understand that when this is happening, we all are responsible for our mistakes. Why are we not able to understand that by sitting in front of the system, by trading few stocks or few instruments, and by luck making money, we will not learn investing. And we have been all taught piggy bank concept, save money. It's a flawed concept because $100 is only worth $100 if it can purchase something. So what it can purchase 10 years ago, it cannot purchase today because inflation has eaten it away. So I think the most important thing which I want all the viewers to understand, that don't get into something unless you take the responsibility for it. Because if you lose, it is your loss. Take the responsibility. We all keep blaming others for the misfortune of our life. I think debit is all mine, and if I grow, the credit is all others. So Jeff Bezos says, you can achieve anything in this life if you are happy to give the credit. And I think that's very important, that every mistake, even if the stone hit on my leg, it's my mistake. That is what I want everybody to understand.
So nice. So nice. Now, your rapid fires. Are you ready for that?
Yes. I was not ready for it, but now I'm ready for it.
So, I'm asking you some similar questions that you asked me. What are the 3 qualities in your wife that you would admire the most?
I have a sixth sense. That's very important. The second is a truly madly in love with me. And the third thing is she is a good compliance for me. I feel like I can make 100 eggs tomorrow, and she brings me back to the reality. So I think these 3 things I love the most.
Very nice. It's good we keep our ego under control. What is one thing you would still do purely for the love of it, even if you were never paid for it?
Yeah. So one thing is definitely helping people, but more important, anybody and everybody, I want them to become an investor. Not necessarily they can afford us or not. they should know how to invest their money. That's why we teach, by the way. We teach every month. And the only purpose is people should not lose money. Because it really pains me, because money doesn't belong to all of us. It's God's money.
Okay. What message would you like to give the younger generation from the experience?
I think the most important message I would like to give all younger generation people is never leave parents. Always stay beside them. It is one fine day you will also see your old age. Parents have done so much for them in selflessly. All younger generation children, even if you've grown up, never leave your parents.
Very nice. Like in our Hindu culture and religion, we consider parents equal to God. And we even say God will be more pleased if you took care of them first and then took his name and chanted and made friends with him.
Absolutely. Ganesha's example. Yeah.
Recently, I read a joke which I want to share with you now here. This is that keep remembering and praying to God so much
Yes.
that in any calamity, it is God who's worried about you.
Perfectly. It is actually not the joke. I'll say it is the fact of the life.
Reality.
It has to be that way.
Yeah. What makes a client first special, different?
You. I think your love, all clients' love, it makes clients first special.
What I mean is business-wise, what makes you different?
Business-wise, I think it's very important that we tell them the risk. By the way, what we're doing now, we're telling each and every client that we promise you that you will see your portfolio 20% down. And that's absolutely normal.
What if it is 50% down?
It is possible in the equity. I think they all understand this. But we're telling them 20% because in the 50% they won't call us. And 20% they will call us.
How do you know? How do you know that? Now they are more educated,
Yeah, it's 50% they won't call us. They will actually either keep they will just keep them away from the app, or they might be funding more. But at 20%, I think many of them, because every now and then, Mr. Shivlani, what happens that these new customers, when this is the first time for them, they feel that the fund manager was wrong. But people who have seen the cycle, like you have seen the cycle, they will call to fund. But people who have not seen it, they will actually come and say, what have you done?
Create a drama.
Yeah, so we actually, as a unique company, we're telling them that it is very normal. And you know what? It looks very, very, very stupid. But there are people, and they say, why are you giving us to this? I said, I'm giving this to you because today portfolio is up. You will listen to me. But tomorrow portfolio is down, and if I'll come and tell you, you'll not listen to me.
You'll not like it, yeah. And you see, one thing happened which I can't forget in China, which is really upcoming. Maybe yesterday it was a developing country. Today it's an overdeveloped country. If you go there, no country equals to China. It's way ahead of America, Europe, or other developed countries.
No doubt.
There I saw a company 2 years ago, or maybe 3 years, 23, going down. A big Chinese construction company, maybe $1 billion or more.
Evergrande, yeah.
And it went down because of one thing. The controllers, directors, our leading team decided that the money they borrowed from the friends, they will show as a sale. So their sale increased and their liability reduced, and proportionally they showed a higher profit. So profit increased. There was no liability, so naturally net profit increased. Now in such scenarios, how would you know that one of your companies, this cannot happen?
This can always happen. An off-balance sheet item where the debt is high, it is always possible. But one cannot hide the debt for more than 10 years. Second thing, they can't fudge the cash flow. So there's a book by Howard Shield called Financial Sanagnin. So we do not need to do this forensic, but we do the forensic. And if, let's say, that company had debt you talked about, and the corporate governance standards were very, very poor, because we all are busy, and even auditors put so many disclaimers that all responsibility lies to the owner of the company actually, or the person who is signing it. This can happen every company. So forensic can give us some cushion against these kind of things. Now, 2-3 simple examples we'll take. everybody seeks a partner in the crime. And the best partner or the worst partner to commit a crime like Satyam Computers crime is the auditor. And if the auditor remuneration is going up more than the sales or the profit, it's an alarming sign. So that is one way. The second thing is the depreciation method, if they keep changing to fudge the profit. So if you look at this way, if there are roughly 30 to 40 the signals which you can use, and still you should be ready that the fraud can happen. Like we just talk about the
That's why 10 companies, because even one company becomes zero, it's 90% is safe, and average 10% will still make it above the 100%.
Absolutely. So we buy 10 thinking one should be enough.
So don't think of 5 or 1.
No, so I think I have something else. A very important thing to say. So all the rich people of the world, they all have one company.
Their company.
Apple, one company. If you are Apple's, let's say, owner, or let's say Amazon, Jeff Bezos, all his life, before he started this new venture, only one company. But if you dig deeper, one company has 30 to 50 businesses. So one company itself is a diversification of 30 to 50 companies.
Particularly these trillion-dollar companies.
Look at Reliance.
Yeah.
Reliance Retail, Reliance Petrochemical, Reliance
But there
Jio.
one share is not your share in 30 companies. They have different shares, different names, different titles for each company.
No, now the children are coming out of, the company.
Yeah.
I always call it, now the company is giving children. Like you have the Jio Finance or Jio Retail, Jio itself is getting listed. So that all the people who made a lot of wealth in their life, one company. So 10 is more than enough, because then you have 100 businesses.
That's what I'm saying. Keep it 10. Don't go to 5 or 1.
No, that's only for if I don't manage your money, then it's 5. But when in the public life, 10 to 11 is going to be there.
Or you can open another model, 5 companies. We can still be part of it.
So there are a lot of things coming, Mr. Sharma.
Yeah,
You
sure,
will be very happy.
sure.
It's like Indian fund portfolio, I think you're already part of it. A lot of things are coming, but we still want to keep it simple, because one of the value system we have, or values we have, keep it sweet and simple. So we want to keep it very, very simple.
Yeah, nice. So nice talking to you, Mr. Bhuvan. I learned quite a lot of things today in this meeting, and look forward to such gatherings and meetings again.
Thank you so much.
Thank you.
Thank you so much.
Yeah. Thank you, brother.
Yeah.
Thank you.